The past month has been politically charged around the world, and it's most certainly affected my portfolio. Last month I said the portfolio went up, but this month there was some drastic changes in the opposite direction. My name's Darren, and I started this channel to help out other beginner investors, and this series is all about sharing the entire portfolio. I started my channel so that I could share building my portfolio from zero to maxing my TFSA out, and I started this journey at the age of 50, unlike a lot of you out there. And in that time, I've done an entire library of videos documenting from day one to get to today. Of course, through that series, I realized I have all these other accounts that I wanted to share and show new beginners that it's not that hard to invest in the stock market. But by the end of this video, you may be a little bit on the edge of your seat and worried about what it might look like for the future. And hopefully by the end, I'll convince you that it's not as bad as you think. Let's jump into the numbers. So last month we were sitting at $336,000 in my portfolio. And this month, as you can see here, we've come down drastically to $332,906.19. But this isn't the whole story for the month, because I've been watching my portfolio throughout the month and it had some really drastic swings. Of course, it actually maintained the 336,000 for a little while, but drastically dropped. And throughout the month, I actually saw it drop down below $330,000. Now I'm filming this on March the 1st, as you can see here. And of course, we're sitting at $332,000. But I want to share with you what it looks like today and what this might be an indicator of for the future. Okay, so we're over in Passiv. Passiv, the tool that I use to bring all my portfolios together in one place. It's easy to track everything because I use two different brokers, which is Simple and Questrade, and of course they all come together with all the metrics to go along with it. But you can see here today on March the 3rd, since I finished filming on March the 1st, we've actually dropped down. And if you look at the chart here, you can see there's been a drastic drop in the markets. Now, as many of you know, around the world, Donald Trump was brought in as the president of the United States. And of course, when he was inaugurated last month, if you go back and watch my previous month's video, you'll see that when he got inaugurated, things actually changed for the positive. I kind of thought it would go the other direction. But as we can see here, the latest meeting that he had with Zelensky over the Ukraine conflict didn't go very well, even though he may have some political ideas of how he would like to solve that conflict. It didn't go very well, and a lot of people got really worried, I think, and that's why we're seeing this drastic drop in the markets. So let's jump into each of the accounts. We'll go through them and I'll show you what's going on in each account, and then we'll move on and talk a little bit about what this might be bringing for the future. Okay, so like I said, today, March 1st, we're sitting at $332,000. We can see over the last 12 months, we've put in $42,328. Now we're into February and it's tax time, and I've been working on our taxes. So we'll be talking about that a little bit in the future when I get my return, what kind of money we get and what we're going to be doing with that when it comes to our portfolio and the strategy that I'm using with the tax return. I have set a retirement goal for these accounts at $500,000. Now I've had some comments, of course, that why is it only $500,000? That doesn't seem very much to live with. This is going to require a little bit of history lesson when it comes to my investing journey. So I started investing at the age of 50, as I said in my introduction. My wife and I got together late in life, and I have a pension, so I don't have to worry about where my income will come from retirement because I have a pension. However, my wife does not, and we have two kids to look after as well. Now, if you look at the breakup of the accounts we do have an RRSP set up for the kids for their education, but of course we also need to plan for other things for them down the road. Now, my father-in-law passed away a number of years ago, and he used to manage my wife's accounts. And then that came, of course, for us to deal with. So my father-in-law passed away. I became responsible for looking after our investments, and I took a look at what my wife had in place. And looking to the future, I realized that we needed to supplement my pension and ensure that we had enough money both for our retirement and as well as our kids. And I chose a number of $500,000 because from the age of 50 till I retire. Now, I'm going to retire at roughly when I'm 60. Which from now, I'm 52 today when I'm filming, so obviously that's going to be in about 8 years. Hopefully I make it that long. And so when I use the software from Enriched Academy, I figured out by plugging in a lot of different metrics how we could get from today to the future. Now, I have access to Enriched Academy through work, so I don't have to pay for it. But if you're looking for a platform that is an all-inclusive way to learn about investing, they definitely are a good place to start. And you can go check out their website and see what it's all about. For me, it's definitely be very beneficial from some of the tools for planning for the future. They have lots of educational videos, and given the current political environment, they are a Canadian company if that's something that you're interested in. So having set that goal of $500,000, the nice thing about Passiv is Passiv allows you to set the goal, and then it tracks that goal for you as your portfolio grows. And we can see here that we're 67% of the way there. And of course, it's measuring the contributions and the growth within the entire portfolio. Now, the portfolios consists of several different accounts. So there's my spousal account. If you don't know what that is, that's where I contribute. My wife takes out the money and I get the tax credit now. A way to share your wages when one earns a little more than the other. Then we have my wife's RRSP and my wife's my wife's TFSA. Now, my wife's TFSA has been dubbed our kids account. We're using it to teach our kids about investing, and so it's dubbed the kids TFSA. The nice thing about a TFSA is it's after-tax dollars and can still grow, but you can have access to it. So when they become old enough, we could conceivably pull some money out and put it into other accounts for them. Or one of the other considerations I've had is opening a trust account for them. Haven't really decided on that, so we're going to continue to think about that and move forward on it. Now, the remaining accounts are my TFSA and my RRSP, and recently I opened up a new spousal account with Wealthsimple. Now, the TFSA for me and my RRSP are featured in my main videos, so if you want to check out what's going on in them, you need to jump over and check out that. I do have playlists set up, so look for the playlist that's about my TFSA, and you can see where I started with that. Again, my entire goal here is to max that account out, and hopefully in the next couple of years we'll get there, or a little bit less than that. Okay, so we'll start off looking at the entire portfolio as far as the metrics go using Passiv. Now, these are all-time returns, so we can see that the net contributions are $271,685. We've been contributing every single month. I have various accounts that I'm contributing to all the time, and you can see those in some of my other videos. The net change in the account is $332,906. Now, you can see here that based on this metric right here, that this is what I was talking about when I said there's been some huge swings. And of course, the smaller your account is, then the smaller these swings are, but the larger your account is, and I'm not saying by any stretch that mine's huge or anything, but the changes are quite drastic when you're talking about percentages and swings of your account. So this is definitely the biggest downturn that I've seen in my account. And you can tell by the graph, the green line is the growth in the account. The blue line is the contributions to the account. So the rate of return in this last month, this is all-time rate of return, is down 1,952%. That's quite a drastic swing. And of course, hopefully this doesn't sustain itself for very long, but you never know. The investment growth in the account is $61,221. The average monthly dividends in the account is $731, and we have a nice graph here that lays out where they come from. So if you click on it, it'll tell you what you had. So in the month, we had $523 in dividends that were earned. And of course, all of these are set on drip, so they get reinvested back into the various accounts. Fees and commissions are only $403. We use the majority of that in Wealthsimple, so we're not paying any fees or commissions. Those have come from Questrade, where I got charged fees. $840 in savings, that's how much we saved with Wealthsimple, and the total dividends in the entire portfolio to date since I started investing in September of 2003 is $17,000. All right, so looking at the month of February, we made $3,750 worth of contributions. The majority of that is through my TFSA, but I do make regular contributions to my spousal RRSP and my covered call ETF case study, and as well as I do make some regular contributions to the kids TFSA, trying to demonstrate that you don't need to put a lot of money away to start your investing journey off. The net change in the account was $527, which is down 0.96%, but the investment growth was in the negative at $3,223. So basically everything that I put in and then some was dropping throughout the month of February. The average monthly dividends is $581 for the month of February, and we can see here through this graph where all of those dividends came from. Lastly is that we saved $35 in fees. That was because we're using Wealthsimple to do our trading, a great platform if you're a beginner. It's easy to use, it's good interface, and very simple for people to get started with. Okay, we're in my Spousal RRSP now. This one has an asset allocation set up. It's 90% accurate at this time. There is a little bit of cash sitting in there. Those are from dividends that have dropped in that haven't been reinvested. Total value is $85,898. Now this account is held with Questrade, so I do get charged fees when I use this particular account. So it is one that I couldn't move over to Wealthsimple because Wealthsimple doesn't offer a DIY version. Now Wealthsimple did start a beta version of Spousal RRSPs a while ago, which is what I opened up. You can see that in my covered call series. So one of the downsides of the Spousal RRSP with Wealthsimple is that you can't do Norbert Gambit. You can only do Norbert Gambit with Questrade. The other thing is that you have another way to transfer funds and save a little bit on fees, and that's through a different video that will pop up on the screen here using EQ Bank. You can't transfer funds in with a US account into those Spousal RRSP accounts with Wealthsimple, so you're forced to transfer funds within the account and get hit with that 1.5% conversion fee. So I've chosen to keep that Questrade account going. Now Questrade did make some changes recently to their account, so I can actually do commission-free trading now in that account, and I've really given some serious consideration to moving all the accounts to Questrade, but we'll have to see about that going on in the future. So here we have a quick overview of what's in the Spousal RSP as far as the asset allocation goes. The biggest being VU, which is the S&P 500. And of course, it trickles down there to some single stock positions. All right, so we're looking at the last month within the Spousal RSP. I did make a $1,000 contribution. That was right at the end of the year because it's tax season. I wanted to drop a little bit more money that we had kicking around in there because we do get a tax kickback from that, of course, when you put it in there. The net change on the account, minus $567 with a rate of return of minus 1.43%. So that brings our total down by $1,567. Like I said, each account drawing down quite significantly. Average monthly dividends on this account, $160. Zero fees or commissions because I haven't done any trading. And when you buy with ETFs, you don't get hit with any fees other than the ECN fee. Estimated savings on the account was $35. Now let's take a global look at this account going back since it was opened. Net contributions, $64,719. Now we can see we haven't really been putting a ton of money into this account over time. Net change, $85,899 with a total rate of return, all-time returns 18.29%. So even though we're seeing a drawdown in this month, we're still looking at positive returns. Investment growth, $21,189. Average dividends in the account, $259. Certainly not a lot that you could live off of, but still I think reinvest those back in to make them grow. Estimated savings, $840. That's on investing in ETFs with Questrade because they don't charge any fees. And the dividend income, $5,869 in total. Okay, into my wife's RRSP. The accuracy of the account's at 93% with the asset allocation. There is some money sitting in here, like I said, dividends that haven't been reinvested with a total value of $167,529. You can see here that it's telling me what I should do with that money based on the current price of some of the securities and how much money is sitting in the account. I have to look at that after I'm done this and I'll decide what to do with that money afterwards. Here's a quick overview of the account. Again, we have VOO is the biggest position, the S&P 500, and then we trickle down from there into some single stock positions and some REITs at the bottom that I've set asset allocations for. So as I said, we're using Passiv to bring all the accounts together in one place and track everything. Now, one of the nice things about Questrade is if you use them as your broker, like I do, you actually get access to the elite version of Passiv for free. That's a value of $99 per year. Now, they do have a free version and it does include a number of things, but of course, if you're looking for metrics, the elite version might be for you. Now, if you're just starting out or you've just found my channel and you're somewhat not that new to investing, but you want to try out Passiv, a great way to support my channel is to use the affiliate link in the description below. If you use that, you get a discount on that $99 elite fee. If you're just going to use the free version, it does track when you use it, and I would appreciate you use it because then it shows Questrade that I'm getting their name out there. Of course, they don't pay me for any of this other than the kickback that I get as far as the affiliate link goes when you do use it with the elite version. All right, so over the last month, this account was net contributions of $258, just throwing a little bit of money in there in my wife's name because then she would get that tax break as well. Not too much, obviously, because it's the rest of it's going in some of our other accounts. Net changing the account, minus $841. We're seeing a lot of minus. Like I said, this is the first time I've seen this, which equates to 0.46%. Just in the month of February, a total of $1,098. Again, we're seeing quite big drawdowns here. All right, the average monthly dividends, $300 with fees and commissions of $0 because we use Wealth Simple. So all in all, we're seeing a very drastic downturn in my entire portfolio, and I don't suspect I'm the only person because everybody that's invested in the stock market is going to see the same thing. It just depends on how big your account is, how much that will affect your portfolio. Now, I don't think this is all doom and gloom. I told you guys before I would chat a little bit about this at the end of the video. Now, if you're just starting out as a beginner to check out my channel and sort of look at how I did things, I would encourage you to research market downturns or corrections. These things happen, they've happened throughout history, and the last year in 2024 was really good for my portfolio and the market in general. Now, political views and things aside, there can be times where the market will correct itself. And right now, aside from what's going on in the political environment, the economy has not been doing very well. We had really high interest rates in 2024, and they started coming down. So with all that, people have been becoming a little bit more conservative with their money, which is likely to be expected. But now when you put the political issues on top of that, we're talking about tariffs that will be introduced into the economy by the United States. People get a bit nervous. Now, who will this affect the most? I'm going to suggest that this is going to affect the people that are really close to retirement. Now, some of you might think, okay, well, Darren, you're close to retirement. I would say 8 years to retirement is still a fairly lengthy period of time. And you have to keep in mind that I'm not going to start drawing down immediately on this money. So my time horizon could be much longer than that. It could be 10, 15, even 20 years of time. Long periods of time in the market will allow you to get through these correction periods where things start to downturn. And what I've noticed, as I showed you in the beginning, there is quite a drastic downturn here in the market. And when people see that and get worried, especially with political views, the people that are closest to retirement that have their money in funds in the market will tend to sell that stuff off right away before they lose a lot of money. And I'll show you a graph here on the screen that I found on Investopedia that demonstrates one of the most recent downturns in the market. And you can see how drastic it was. It took about a year in time where the market was dropping. Now imagine if you had seen the last year, you started investing like I did and you thought, wow, like every day the market is growing, your portfolio is growing, and then all of a sudden you see something like this. Man, it would just make you cringe to think that your portfolio dropped 30%. Look at the numbers I showed you today. We're talking small amounts like thousands, $3,000. Now imagine that number getting larger and larger where you're losing 10, 20, 30, even more $1,000 than that. That can be pretty scary. But here's the thing is, you gotta ride it out. Just like dollar cost averaging, where you take your money and you invest it when you have it rather than trying to time the market. In this case, if this is the start of a market correction, you gotta ride it out. Now, if you're really close to retirement, you probably aren't really gonna be watching my channel anyway because you already know about investing, but let's say you were, you probably should have set yourself up with some fixed income so that when something like this comes along, you don't have to worry about these big downturns in the market. So for me, I'm not too worried about the downturn right now. It could have just be a bad week. Who knows? This could blow over and all of a sudden things will turn around. But even if it doesn't and we see a huge downswing in the market, I'm in it for the long term for the next, at least 8 to 15 or even more years. I'm pretty confident that this will correct itself and we can ride it out. And what does that do for your portfolio? Well, as positions start to fall and I dollar cost average, I'm actually going to be buying these stocks as they drop, and then they will gradually go up and the portfolio will grow. So in the end, it will be good for me. Now, if you're just starting out and you don't know what an asset allocation is, you should probably watch this video right here.